Thank you for listening to Mailbox Money, your guided tour through safe, sacred, and speculative investing with a plan and a purpose to do more good with newfound peace of mind. All right, everybody, welcome back to another episode of Mailbox Money. In this episode, we are going to talk about one of the more entertaining components of investing. We're going to talk about speculative investing. And what we're going to try to do here during this episode is make it so that you have a crystal clear understanding of what we mean by speculation and speculative investing, and why we believe it's an exciting part of an investment portfolio, but why it's one of the last things that we get to in terms of building financial plans. When you follow our framework for investing, speculative investing comes third, right? It's kind of the caboose on the investment portfolio. The first one is obviously safe money, and we have hammered why it's important for safe money to exist. It's hard to not get excited when we talk about safe money because of just what it does from an emotional perspective for individuals and our clients. Safe investing, you may call it boring, but it is absolutely crucial to any sort of investment plan, because the world isn't always just, rainbows and amazing. There's times where you need it. And if you don't have it when you need it, it's stressful. The second part is sacred money or sacred investing. And that's where we talked about rising income, sorting through all investable companies and finding the ones that we believe in and that have the data, more importantly, to show that our clients that hold these positions will receive increasing income throughout retirement. And one of the components of that is not relying on a second or an inch or whatever, a fraction of a percentage of market appreciation when we build these sacred money portfolios. Again, because maybe the market doesn't always go up and we still need income from our retirement. But what this does is it unlocks the ability, once you have the safe money and the sacred money, it unlocks the ability for us to pick more aggressive or more speculative investment strategies or invest in more speculative asset classes. So I want to turn it over to Ryan now and have him talk about the idea of safe money and sacred money unlocking the ability to speculate a little bit.
I've just seen it work. We've got too much evidence that the unfair advantage you can give yourself with the most aggressive at-risk assets in the speculative sleeve comes from having no scared money in there. Too many people start there and say, I'll get serious and add to the safe, boring stuff later after I make a little bit. I would suggest thinking of the exact opposite with any amount of money, because what happens when you've got mailbox money pouring in, risk-free and rising income streams, if you know anybody with any version of mailbox money, if you've noticed they have a little bit more uncommon peace of mind, or maybe they don't read or discuss the news every day like other neighbors, peace of mind has a close cousin called creativity, and the ability to see and hear and be curious and find unprecedented opportunities like we're about to jump right into. And I'll use myself as an example. It worked for me. It's how I found Jackson Wood, who is the portfolio manager of Freedom Day Crypto Assets, which we have just launched in 2022. We've worked on it for a couple of years. Not every day or every career that you get a new investment that is an actual new asset class to consider. My first order of business, because I was not an expert, but I was curious enough to know I needed to know, was to find a native. And there is nobody in the country that I've found that has your background and your skills and your chops as a portfolio manager to attack this for us. And we're going to jump right into it. Crypto assets, called a lot of different things. Let's be super clear. It is speculative. And before we get to that chocolate cake and all of its delicious upside, you got to start with broccoli. It's what I tell my 5 kids, and it's what's in every one of our plans. And if you're able to do any version of that in any sort of simple balance, that's why we like to keep it simple: safe, sacred, speculative, you unlock the potential to dive knee deep into what I believe and what I wanted to be the first client for you, Mr. Wood, as the investment with the most upside I've ever seen. But it's going to take a lot of research and a lot of active management to get there.
Yeah, so I think that it's just fun when you look at cryptocurrency and investing in crypto assets through the lens of, hey, I might get this wrong. We might be in for a world of pain for the next 10 years or 15 years, and that's going to be okay because I've got my broccoli, I've got my safe and sacred money. But when it comes to cryptocurrency, and just so everybody knows, the website is freedomdaysolutions.com/crypto. You can go and read all about how we do this and how we build these portfolios. This is one of the areas of speculative investing that we're focusing on, and it is our primary focus at this moment because this is providing a tremendous opportunity. And so what I thought, Ryan, is maybe we can just go discuss some of the projects and some of the themes that we are looking at in the current portfolio as it sits, and then talk about perhaps like some new versions that we expect we'll see if, you know, our predictions in this asset class work out.
And I'm going to get my traditional finance skull out of the way here real quick, but just a little bit of backdrop if anybody's coming in this with wide eyes and curiosity like I was, and it is not a native. I think the framework for the way to think about this is, you said the key word that turned my mind, and my aha moment was the ability to invest in projects early on. Some of those become companies. They used to be called IPOs. They're probably called something different down the road, but not an entire investment class that is an entire new asset class. And the way to think about this, I think some of the naysayers, who also will be right, there will be all sorts of disasters along the way. That's how early we are. We'll point to the late 90s and all these different internet companies that skyrocketed and didn't work. And that's how it kind of feels to somebody who didn't know back then, just like we don't know now. I would take one step back as I was entering the industry. It was more like the mid 90s if you had the opportunity not to invest in one of those upstarts, but to actually own a piece of the internet itself, which would have felt just as goofy and be laughed at. That's how much a part of every sector we think crypto will be. It's not going to be an investment class. It's going to be like the internet in all of the most old industrial economies, which we'll talk about, to brand new tokens and ways of doing business that we haven't even imagined yet. That's the framework I would listen to this with if you're in traditional finance like me, with at least a healthy amount of curiosity, the ability to be so early in a project, not a coin. Take it away.
Yeah, that's right. So, you know, you look at the dot-com bust, and I don't know how many, I was around, but I wasn't trading back then. You know, if you have 100, you know, tech companies in the late 90s, how many of them exist today? Maybe 2 or 3 or a handful of them. But the internet has taken over and is controlling everything. So this is the same revolution that we're going to see blockchain and cryptocurrencies bring to our industry and to almost every other industry out there. So to build this framework and think about crypto assets in the right way, I want to distinguish between Bitcoin, Ethereum, and then other projects that we see potential in. So the first one is Bitcoin. This is the first project launched. It was built upon, you know, 2 other failed cryptocurrency projects. But what Bitcoin is becoming and has become and will continue to grow into is a store of value for a lot of people around the world, including us, including giant corporations. But what originally drew me to Bitcoin was I was studying economics, and I never gone through this in the U.S. I suppose now with higher inflation, it's a little bit more, or hits closer to home. But there are certain emerging countries and emerging economies that have their currency fluctuate by 30 or 40% in a given month. And so Bitcoin became, and to them, El Salvador is one of the countries that has this as legal tender. There's a bill going through Mexico now. Just in a certain part of Switzerland became currency. Bitcoin is a store of value or a currency that is able to be used by anybody with an internet connection that is programmable. And this is an interesting component, and programmable is important to understand here. There's only going to be 21 million Bitcoins ever created. The issuance of those coins is at a schedule that we completely understand. So Bitcoins are going to be continually minted into existence until the year 2140. And so, but because of the code, because anybody with a computer can look at the code, we know exactly how often those will be issued, the rate at which they're issued until a certain date, and we've reached the cap. So in order to understand how important this becomes, it's maybe difficult for somebody in the U.S. to understand because we've had a very stable central bank and a stable, government, and you can argue either way on that side. But when you can compare that to someone living in Africa or someone living in an emerging market, whether that be somewhere like Chile or Argentina or Venezuela or even Eastern Europe, to have a money that is immutable, that is uncontrollable, no one can affect it, becomes like this very powerful economic force upon which you can save money. You can build a system of deposits and borrowing and lending that just are not possible if the very currency that you're transacting in may or may not exist in a year from now. I have a $100 trillion bill from Zimbabwe, and one of my friends actually lived in Zimbabwe, and he said that they would have to go spend their money on lunch break and then again at the end of the day, because if they waited to spend money until like on Friday when they go grocery shopping, that money that they got paid Monday, Tuesday, Wednesday was worth significantly less than the money they got paid on Thursday and Friday. And so upon this system of sound, and they call it ultrasound money, even better than gold, some people argue, you can build an entire economy. And it almost brings the individuals with really good business ideas and savvy into a kind of a level playing field where they're not having to fight the uphill battle of if their currency exists in a year from now. The longest, I read this last night, the longest standing fiat currency is the British pound sterling, it's only 300 years old, right? The world's been around for a lot longer than 300 years. We've been using currency for a lot longer than 300 years, but they're in and out of existence. And this isn't me predicting the dollar's demise or anything like that, but it's just saying that Bitcoin created the ability for a lot of the world that aren't fortunate enough to live in these really stable countries to just join the level playing field and build businesses. And there's a lot of value that unlocks for their entrepreneurial minds and what their industry can do. So that's the first way to look at cryptocurrency and the number one project, the Bitcoin.
I don't think we can underestimate that. We're going to jump into more exciting projects, but we take so much for granted in the United States, and it's like the fish that can't see water. That's how a lot of us feel about the U.S. dollar and currency, and the difference in the success of capitalism as it applied to the West, really with a stable currency and property rights and the ability to then form a mortgage system, because none of us when we started had the ability to go buy the entire house, but when we had a stake and we could pay interest, all the good that created, I want to go to work. I want to take care of the house. I want to take care of my family. I know that I at least have a sound currency. That piece will affect more lives than anything else we're about to talk about. And we just can't take that for granted. It's impossible not to in the United States, but that has enormous potential to deliver more good. That's a lot more important than an investment opportunity, but keep going.
Yeah, so I agree with that. And Bitcoin, the technology of Bitcoin allowed and paved the way for these other currencies with a lot more use case than just money and a store of value. But it paved the way for these to exist. And the first one that we're looking at, that we hold and invest in, and I'm a holder of and a believer in, it hasn't always been that way. I think it's important to understand. We don't blindly buy these projects. We are analyzing them. One of the best things about cryptocurrencies is all of this is transparent. So we can actually go into this program called GitHub. We can go onto the development forums and we can look at what developers are actually doing on these chains. So it may have the fanciest website of all time. It may look good and have 1 million paid Twitter accounts promoting it. But we can actually boil this down through active management and fundamental research and see if there's actually merit to this and if brain power is being devoted to it, or if it's ripe for a scam or some sort of, misrepresentation of what the project is. So just to be clear, when we do our research, we are looking at fundamentals of these crypto projects. The second biggest one that I think may very well be the biggest one by the end of this year is Ethereum. So Ethereum is a blockchain that can run applications on top of it. And when I say applications, I mean decentralized applications. And what an application is it's just a piece of logic that somebody codes up and they run it on top of blockchain. So instead of running this on top of a server that's done by Amazon or, Microsoft Cloud Services, this is run on top of a blockchain. So it's a decentralized, permissionless application. And what we're realizing is that these applications can be designed from scratch and can be designed to combat any traditional centralized application that we have now. So a couple of the ones that I'm looking at and that I think will be disrupted are what you just mentioned, banking and payments and mortgage. I think that smart contracts are going to go in and disrupt lending and borrowing. Not going to say we're inventing an entire new lending and borrowing component. I mean, everybody needs to borrow to get a mortgage. You can't buy the whole house right when you start. But can that process be made better for the end client and the person that's facilitating the transaction or brokering the deal? It can. And smart contracts can make this done much more efficiently, much more transparently, and cheaper, which results in better outcome for everybody. Another thing that I think is really important, and Ryan and I had a conversation with a CEO just the other day, supply chain management. There is a big issue of companies talking to each other. I think that this is very well seen in today's current economy, where we're having all sorts of, and we'll probably see them for the next few years, supply chain issues with people not knowing what demand is out there, what supply has been created. And so you have suppliers, seeing that there's demand, they perhaps may think that is kind of infinite demand or will last for another few years. And so they're going in and devoting resources and CapEx to build and increase their supply. All of a sudden there might be like this lag and latency in actual demand figures. And so you get these really goofy kind of whipsaw between supply and demand. I think they'll write Freakonomics books about these issues. And really you can solve a lot of that if you just had transparent mechanisms and protocols that could talk to each other. We're not talking about sharing private information. We're talking about sharing vital information between suppliers, distributors, retail owners, where they are interacting with the customers and you see immediate demand instantly. And so blockchain enables this cross-border, language barrier problem to be solved in the fact that anybody with a computer can connect to the blockchain and see what's happening in real time. And
I think a digital immigrant like myself, that's why I'm gonna get out of the way and keep listening more to the digital native, would appreciate the background of that story. That CEO, probably, as you and I would agree, one of a handful of the most brilliant guys in crypto assets. He didn't start that way. He started solving a problem inside of a corporation using an Excel spreadsheet that by the time it got passed around all the different departments, it was too late. And the latency of that, mission critical on an enterprise level, and he wanted to figure out a way that they could all be inside of the same spreadsheet at the same time. That was another aha moment for me. And that happened to be a little more painful meeting later that day with our attorney, who had an old document with saved in a different file than the one we were working with, and just that different kind of all these friction points. And he wouldn't mind me saying this because it's the truth, even though we overpay him for it. If there's 70 or 80 or 90% of that document that was cut and pasted from another document, well, that's a lot of friction and a lot of fees we could eliminate too with blockchain technology. There's just a couple of examples of traditional ways of doing business and entire industries that are going to be turned upside down, including Wall Street.
That may be the one I'm the most excited to see disrupted. No offense, Wall Street, I'll put my helmet on. Crowdfunding, private equity, raising money in a business. This is so much more efficiently done with tokens and with smart contracts running on top of decentralized blockchain. And I say smart contracts running on decentralized blockchain to help the listeners understand that this is technology that is vitally important to our way of life. But the end user experience is going to be a lot more elegant than it sounds when you use those big fancy words. So even just the idea of like, if you want to start a company and you need to raise some money because you've got enough money to pay for a few months, but you'd like some outside investors, you have to go through all sorts of, fundraising rounds and go visit everybody. And how do you get the money in? And banks have to talk to each other, and their bank's system may not talk to your bank system. And then Then how do you issue shares out? This is very elegantly done on blockchain. In 2017, this took the world by storm with what's called an initial coin offering. And I think that the developers and the technology got way ahead of regulation. And perhaps some people in the crypto industry dismiss how important regulation is. And I'm not, saying that I'm a big believer that, governments can control everything perfectly. Regulation is necessary, and it's actually a good thing, right? And it's designed to protect investors from bad actors in the ecosystem. And so at this point in time, we're so close, and we're starting to see this actually happen where the technology and the regulation are playing ball together. And what this is going to do is it's going to unlock the ability to raise money as a business or to invest your money and to track those tokens on tokenized exchanges and inside of custodial platforms that hold securities. So you're going to see the very industry that we work in every single day disrupted by this technology. But the outcome, and the reason that I'm excited about this, is because it's so much better for the end user, which are our clients and the stakeholders themselves. And so even the biggest industry in the world, the financial industry, that will be disrupted by the very technology that we're investing in. And so that's part of our game plan. This is made possible by Ethereum, which was made possible by Bitcoin. And then Ethereum paved the way for a lot of these other tokens like Polygon and Avalanche and Solana, and Luna is one of my favorites, to build and just figure out what industry is ready for being disrupted and what type of actions can be coded up into a smart contract and live on this blockchain. So it's a very exciting time to invest, but I can't stress this enough. It's going to be a bumpy ride. We have to make this technology work with regulation. Some of the regulation is way out of date and we don't need it. And so regulators are going to have to update the way that they look at these things. And this is a slow moving process, but ultimately it's as if we were investing in the very base protocol of the internet itself. We knew in the 90s the internet was going to be around in 2000 and in 2010. We know that blockchain is going to disrupt all of these industries, but for the first time, we don't have to go out and pick the company and hopefully get lucky. We can actually invest in the base layer protocol that's allowing the disruption to occur. And yes, there will be companies that exist and the tokens we can invest in addition to the base layer protocol, and we will, and we have. But at the same time, we can just bet on the technology itself and enjoy the benefits that brings.
And I want to do what we always try to do on this show, and what I felt was so sorely needed from two professional portfolio managers to open their own playbook. Tell us the answer to the most important question, I believe, in cutting through all of the noise and friction. How do you invest your own money? I said it before, and let me just define how significant. When I say a new asset class, I mean, we got stocks, we got bonds, we got commodities. Crypto assets, if we are correct, will be an entirely new asset class. That is so significant. And what's different this time, among a lot of other exciting things, from my perspective in traditional finance, it's the first time that the individual has the advantage over the institution. They were earlier. I mean, we just met with some of the smartest institutions in the world in one room, and they all know they're late. And they'll tell you how they're going to have to catch up. And if you knew nothing else, that there was this large sea of capital coming into something that's going to be bigger in 5 or 10 years, that alone should really require you to at least learn, if not be involved. Now, how you attack that in our playbook, it's going to be no different than what's always worked in the past and what few can grasp or access, and it's active management. There will be, and there are, a few indexed solutions, just a passive approach, got to own it all, which has its own flaws, in my opinion, as active management diehards from day one on the equity side. But in this space, Jackson, and you know better than anybody, there's going to be constituents that wouldn't even be in those indexes. So not only are you more at risk, in my opinion, of just owning it all, but you're going to be missing newer opportunities. So page 1 of my playbook is always the same. And I would suggest any investor, it doesn't have to be us, but find your answer to this question. Skin in the game matters. There's nobody that's going to be more careful, disciplined, sell and buy discipline with active management than somebody who has skin in the game. Morningstar, the old traditional finance that's studied and has more access to mutual fund data than any other. One definitive, clear clue: managers with their own skin in the game outperform. I found somebody who, in that same room with the smartest in the world of financial institutions, not a single one of them has been involved personally as long as you have, which delights me. I know you don't like to pat yourself on the back very often. I will. That's why I wanted to hire you as my portfolio manager for crypto assets.
Well, I appreciate that. And one quick story. We're sitting there at a conference, and this powerhouse CEO, lady runs a gigantic company. I mean, huge. Gets up, and the interviewer starts asking her questions about what they're doing with funds and bringing a mutual fund business into the ETF world, which is the theme of this conference, right? And, she goes through it, and it sounds really exciting. The last couple minutes of her talk, her demeanor completely changed. The tone of her voice changed. And it was because she was talking about cryptocurrencies and crypto assets and what this is going to do. And conveniently, which was funny, and you and I both picked up on this, ignored all of the really cool innovation that was going on. Not to discredit that or not say that was cool, but she is control. I don't even know how much money they control, but to the tune of hundreds of billions of dollars, I'm assuming, close to that, if not. And the thing that she was the most excited on was how this technology is going to disrupt the very industry that she has built her career on. And so it's very important to express this in the correct manner, with discipline, with fundamental approach where you're looking at projects. You're not blindly buying an index. An index doesn't work in an emerging asset class. And if you don't want to, if you want proof, go back and look at the top 10 asset class or the top 10 projects in 2013 and compare it to 2020. Excluding stablecoins, there are 2 projects in there that still remain, Bitcoin and Ethereum. The other 8 have been washed out multiple times throughout those years, over and over and over again. And so you have to be able to look at this from not only an entry point, but a get out point as well, because some projects may have all of the rage, all of the developer support, but then you discover something. And if you're not paying attention to and actively managing it, you're going to ride that thing back down. So our approach is that this sits really nicely alongside a safe and a sacred portfolio. It's something that you are unlocking the ability to invest in if you're disciplined enough in the rest of your portfolio. And it has tremendous upside potential, we think, just to make everybody's lives better, to do more good for the world. So that's how I look at it.
And just to be clear, the way you've started and the way we're going to finish for anybody that wants our help as a guide, these are private, separate accounts where they are the owner. That's the only way you and I would have it. Inside of funds, that may work. And there's going to be some smart people that do that, and we're friends with some of them, and I give them all the credit in the world. But a lot of those layers are expensive, non-transparent, and set up extremely well for the manager. This should be no different than anything else, in our opinion, set up well for the investor in the most transparent, clean, and frictionless way. So they're the owner, and they get to see it.
It's on chain. I mean, you don't get the full benefit of crypto assets and ownership unless you own it directly. So that's what we wanted to do for our clients. Learn more at freedomdaysolutions.com/crypto. It's exciting. If you have any questions at all, please reach out to us, team@freedomdaysolutions.com, or leave a comment below. If you like what you're hearing, it would be very beneficial to us and other people that could find the show if you like and subscribe. And we'll see you again next week.
This show is brought to you by Freedom Day Solutions, LLC, a registered investment advisory firm advising individuals and families nationwide. Performance is not guaranteed, and past results are not necessarily indicative of future performance. To learn more, visit freedomdaysolutions.com. This show contains general information that is not suitable for everyone and was shared for informational purposes only. Any forward-looking statement or opinion expressed is subject to change without notice. Nothing contained herein constitutes investment, legal, tax, or other advice, nor is it to be relied on in making investment or other decisions. Clients of Freedom Day Solutions may hold positions in the securities discussed.